Well, hello, Maverick traders. It's January 9th. Joe with you here. It's a Tuesday. Moving into the second week of the year, and the markets look like they're trying to stabilize. I've got my 2 cents. You guys know the drill. Take responsibility for the outcome. I'm going to break down the day's news. I'm going to take a look at the markets, analyze, and see where we're at, and see if there's anything we can't take advantage of. And as always, we're going to share our trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into our market analysis, you can see that we actually kind of created, well, I'm going to call it the first bounce of the year on a couple of these, but pretty much just kind of more of the same. So real quick daily news here. The SPY and the Qs, and you'll take a look at both these charts, had a nice bounce on Monday, creating the first pivot low for the year. I know it's only been a week or so, but it's a pretty substantial area, especially based on where these markets started to pull back. Now, the diamonds themselves have been more of a consolidation pattern. It's definitely outperforming. The three out of the three markets is definitely the strongest. I do believe because it's got the least amount of rotation. And folks, I do believe there's still rotation going on. I think there's profit taking going on. We really can't look too deep into any of these moves until we start to see them break super major levels. So always double check that. I'm going to get into where we'll actually see sectors lead. We do have our top-down approach. And it's a little bit hard to do at the beginning of the year because of this reallocation of funds and profit taking. So a little bit of head faking going on. I'm usually not very active till like the second week, maybe even the third week of the year. Plus we have earnings season coming up, which I think could help set the tone as we go forward. So how did we finish? Dow, the S&P, and the Qs pretty much flat. Russell's down just slightly. For the Russells, that is, it's been super volatile. But if you take a look at all of these charts, they are either in a pullback that still agrees with the overall bullish sentiment, or they're consolidating. So there's nothing really changing overall that leads me to believe that we shouldn't be glass half full here. But there could be ominism when it comes to where these bounces go. I'll talk about that in a minute. Oil up quite a bit today. Good bounce, 2% about, 1.99%. It's at $72 a barrel, right around there, just above it. And gold pretty much flat. Moving over to the advanced decline line, even though it was a flat day, 68% of stocks were declining, 28% were moving higher, and then 4% just kind of staying flat. So the ones that were moving lower actually got hurt, and they were as to be expected. We'll get into the heat map in a second here because what has been weak is staying weak. Some of the weakness that we're seeing in the stronger stocks are just corrective action. Above below the 50-day moving average, 77% above, 23% below. So let's jump straight into the charts here. And this is the SPY, and this is the bounce I'm talking about. What I like to see in a bounce like this is the size of the candle at this doji. And this doji is just below the 20-day moving average. One thing that I did think was pretty interesting is we really didn't get too much volume associated with it. So this was more, they refer to this as a dead cat bounce or just an oversold bounce. So is there more selling to come? There could be. So what I meant by things being a little bit more ominous is that this could be, even though we did bounce at a very bullish level, just below the 20-day moving average, I'm going to keep my eye on this high in this area. We could see these markets just kind of stall out right around this area and start to turn. And if that does happen, then we've got a double top. And if we break this level here, then we've got something a little bit to worry about, a little bit more to worry about. So it's the volume right now that's got me head scratching. It's this volume here as it's decreasing in this move to the upside that's got me a little reluctant to just go ahead and just put the pedal down when it comes to the bull side. Now that doesn't mean I won't look for bullish trades in these areas because there are some sectors that are strong and there are some stocks that are strong. But I'm not going to do anything that's going to be, okay, I'm bullish for the next 3 months, especially when we have earnings coming up. I really think it kicks off next week. So that's kind of where I'm sitting. Let's take a look at the Qs. It's the same story. I'll just do some brief drawing on it here. And it's super similar. It's this area up in here that I'm worried about, and here's that support that it set a couple of days ago. It has that same decreasing volume, kind of the same story. I mean, this is something that if we saw a pivot point right at this level, would be something a little bit worse, because now we'd have a descending triangle pattern, and then this the floor here, this arrow that I drew, is a lot more important. So yes, this could be just that little dead cat bounce. We could see this roll over and we could get into some selling. But right now where the markets are at, we have to stay with our same +2, +1 outlook for week to month. I'll get there in a second. So not much to go off after a day. But yesterday's bounce was substantial. That candlestick was huge at that point, even though there was not much volume associated with it. Take a look at the heat map. And this is exactly what we expect, more of the same. This is why I do like following sectors here at the beginning of the year. We usually have a top-down approach, right? It's the market, sectors, then the stock. We really can't get that with the overall markets because we're seeing profit taking in a lot of these. I'm just going to go ahead and pretty much box in all of this. The internet stuff, communications, I should say, technology, all of it. We're seeing stuff getting pulled out. Nvidia is one that actually went from my sideways because it was getting sold off into the end of the year, and it's back up to my bull watch list because it's now turned around and starting to break up. So Nvidia might be done with its profit taking and moving back into more of its normal euphoric place. And I don't know if that's going to last or not, but you just have to wait for those things to happen to make sure it correlates with the sector it's in before you pull the trigger. So it's going to take a little bit more patience is the word to use before I really start pushing buttons, at least on my end. So where am I at? Well, I'm going to stay with the +1, +2. We're above the moving averages. We weren't yesterday morning. We weren't on Friday. So I had to have that kind of a sideways, but that was a really good candle. I'll say it again. Good candle, no volume. We need the follow through though. It needs to get up and retest those highs. If it doesn't, then I'm going to take that +1. I'm going to put it to a 0 on the weekly outlook. And if it consolidates or lowers that, gets below the 20-day, I'm going to move my monthly outlook to a +1. Now, folks, that's still +1. That's still bullish. It's just I'm going to be a little bit hesitant before I go full on there, especially getting into earnings season. So we'll have a whole lot to look at, or help us, I should say, when it comes to our decisions. Taking a look at our potential trades, I moved a couple of things out of our neutral side. BEKE, if you guys had followed around with me for a while, was always on our sideways, and it did really, really good. I'd say the last 2 months into the end of the year. It has now rolled over and starting to break support levels. Nvidia was one that I had last week, and it is now breaking up and moving into the bull side. So sideways to up on Nvidia, you'd still be in a good spot. But Peak, HST, Monster, Fifth Third Bank, I think that's the example I have. I do like it, as banks usually lead off earnings, and this has got a nice high base going on. I'll show you here in a second. And then on the bear side, yeah, you've seen APA, ExxonMobil, COP, Starbucks was cool. Most of these Corey talked about yesterday as well. CNK we also went for, but I did think Disney was pretty interesting. Cinemark is good too. CNK, because they're both in communications, or if they're not the communication, I think they're communications, but they're entertainment. So take a look at both those charts. More of like I have a sideways to down. So let's get into it. Instead of me telling you about it, why don't I just show it to you? So this is what I'm talking about with a Fifth Third. It's just got this cool little box up here. I love it. Look at this. Just a nice high base. It did have that same candlestick that we saw in the rest of the markets. However, a little bit of an increase in volume on it. So it was kind of neat to see a little bit of a push. Now, it has dropped a little bit since then, but it is testing these levels. It's back up to where it could be breaking above kind of this resistance here. So a diagonal on this, sideways to up, I'd be more than happy with. It does feel overextended. It's a pretty good move off the bottom here. You guys can see after this crossover that it had, it's just been pretty much parabolic. But that 20-day is catching up with it, and I do like it as a consolidation or a kind of a diagonal sideways to up trade in the near future. On the other side of the coin, I have our bear, and this is Disney. What I liked about Disney is descending triangle pattern. This one is tough because I do feel I might be a little bit early on it. So just be patient. Let me see if I can do my best if I can mimic this descending triangle pattern here. Let me get my pin out. Sorry, folks. What I like about it is this. Nice and descending. You got a rolling over 20-day moving average. It just broke the 50-day moving average today, which is pretty good. You can see that where it closed today, I already drew my line for the descending triangle pattern. I like the size of the candle. I do believe that's some sort of an announcement or event. That's what just happened today. We'll see if that follows through. But if this does break, you can see there's quite a bit of room for this thing to go. Let me see if I can draw a couple of lines for support. The first would be obvious. It would be the previous gap here, and then maybe down to where it started, somewhere in this area. You could actually kind of combine this double top that we saw and put those two together here. So it's got a ways to go if it really wants to bleed lower. I don't think it's going to fall apart unless it misses earnings or something like that, but you might want to play something descending, kind of creeping lower if you want to do something on the bear side. Like I say, for me, the verdict's really not out. I'm not totally buying into, hey, we're going to stay bullish or we're turning around here, and I'm not going to buy into we're going to fall apart. Instead, I'm going to play it. We might be a little bit weaker than what bullish sentiment might suggest, especially beginning of the year. I know that we have the rotation, we have some profit taking and stuff like that, but it really shouldn't impact the markets negatively unless there is real worry about things moving forward. Hey, have we reached our peak when it comes to earnings? And we're going to see that here in a little bit. Or if traders just want to pull out of the money slowly, or we're going into an economic slowdown. We've heard all the scary things. We've heard all the great things. It really just depends on where the markets want to go. So wait for confirmation with the individual stocks that correlate with desired sector direction. And that's right, folks. I'm fine with you actually finding a stock and then backing out to see if the sector itself agrees with it. It's been really easy with anything in energy, anything with oil or gas. It's been really cool. Those have been very consistent to the weak side. Even with a bullish movement that doesn't correlate with it, if you wait long enough, they do roll over. And I'm seeing that in both directions. But kind of stay away from your Apples and Microsofts and Amazons. They're kind of hard. They're hard to trade, and because just when you think that the buying might be or the selling might be over, you'll get into it and it'll just kind of meander sideways and then slip a little bit. So until that's washed out, you're better to go with a sector that's predominantly in a direction and work your way forward from there. So wait for the full top-down lineup. And what I mean by that, I think once we get into earnings season a little deeper, I do think we're going to get some markets that will actually agree, or I should say agree with each other and take a direction. And so we can get a lot more directional for longer term, meaning 2 weeks out, 3 weeks out, 4 weeks out, things like that. Economic reports, we did get a consumer credit increase to an all-time high. It was something like $5 trillion, 5.7% annual rate. Talk about, hey, could this be a spillover from what we've seen when it comes to inflation and some of the things we had to do to pay for it? I'm going to go ahead and say this is a November reading, which is the beginning of holiday activity. So we'll see if that increases, then we have a consumer that's overextending themselves, and that will create worries or problems moving forward, especially if inflation is indeed coming down. It's going to be pretty interesting to see where that goes. But right now, let's just chalk it up to that's going to carry into a holiday. Jobless claims, CPI and PPI tomorrow. That's about it. Earnings season does kick off, I think, the end of this week, Friday, but I think it really does get going Monday. But always just check your potential trades just in case. All right, guys, that's all I got for today. Thanks for joining me, and we'll talk to you next time. Bye, everybody.